Hi all. Hi Francesco. Hi Johan. Hi Leon.
Hello everyone.
Hi.
Nice to see all of you. Let me introduce Leon Wankum, that is the guest for this episode. So Leon holds a bachelor in philosophy and a master in financial economics from economics from University of Glasgow, and he wrote one of the first master theses on Bitcoin, focusing on how he could bank the unbanked, revolutionary the remittances. He serves now as a head of Bitcoin strategy at OneVest, a Hamburg-based real estate development and investment firm. He leads the integration of Bitcoin with traditional real estate projects and coordinates international strategy. Last but not least, he's also a prolific writer and speaker. Leon has contributed to Bitcoin Magazine and CCN and has appeared at global events like Bitcoin Prague. I was also happy to be there. His essays often explore Bitcoin's transformative impact on real estate, money, and society. And we are all looking forward to get to know more and more about the connection between Bitcoin and real estate. So welcome again, Leon. Maybe we can start with you giving more information on what is your job at OneVest on Bitcoin.
Yeah, I mean, you gave a pretty good, intro there. Thank you for having me on, guys. It's a pleasure. And 5 years ago, we started to look at Bitcoin as competition and the way that people would store value. And that thought process was definitely initiated by MicroStrategy as the first corporate to not just buy Bitcoin with their cash, but to also start using it as credit. So I think that was pretty interesting, the way that Saylor talked about Bitcoin being credit, because when I think about real estate, I think about real estate as a store of value, but I also think about it as credit. So if you work in real estate, you usually learn how to leverage the balance sheet that you have, which is the real estate portfolio, to either develop or invest into new properties. And I feel that what Saylor has been doing and what is happening right now with Bitcoin is it's used as credit. So that was what initiated me to switch my focus from construction. So pretty old school construction, renting, property management, financing, from cleaning out a garage until, managing the sale of a finished property. That was my job until then. And then I started to look into ways to integrate Bitcoin into the existing business model and use the balance sheet to leverage that into Bitcoin. If you want, we can go into the different strategies, but overall, that's what I'm doing.
Great. Also starting with normal, let's say, TradFi job, and then slowly move to more Bitcoin focused, looking also from a Saylor playbook.
Yeah, but Bitcoin or real estate and that connection, that's what happened. As you mentioned, I was interested in Bitcoin beforehand.
Yes.
A few years before I switched into my role as a head of Bitcoin strategy, so to say, I was involved in I'd say the Austrian, I got involved into I was interested in the cypherpunk ethos, first of all. That's what drawn me, or what has drawn me into Bitcoin. And then the Austrian economics as a whole, as a counter economics that exists for 100 years already, but they never had the ability to actually prove that they're right. And Bitcoin is a theory proven itself constantly. And when I look at Bitcoin's price, I look at it as a proof for also the ability of reasoning and Austrian economics to reason by first principles, which is important in the investment landscape. And I think we've kind of lost that type of thinking, and that led to a lot of male investments and misallocation of capital in the financial system. And I think Bitcoin can help to reallocate resources. And definitely also over time that will have an effect on real estate, of course, and the way that fixed income and bonds are structured today.
Yeah, I feel that real estate, is the biggest market, out of the 300 trillion picture of the global wealth, real estate has the biggest slice. This means that the people who believe in this allocation wealth are less prone to change, ideally. And that is very clear, especially in Europe, where compared to the US, there aren't a side of yours on your firm, the prospectus I read, many vehicle of allocation, where you can mix the two assets. And I want to ask you, given that you already have had some allocation for your customers, what's a big blocker? Is that of course the bank doesn't recognize Bitcoin as collateral yet, as opposed to the US, where some bank is started to recognize the ETF as collateral, and new products are coming in the last few months. We can name now there is some Bitcoin bond coming, which can be used to collateralize real estate. And then you have Horizon product where there is a mixture of particular contracts where they unlock some equity of your house. So you think that in Europe we have some bigger blockers to this ecosystem to develop, and if you can point out to what the state of the real estate versus Bitcoin is in this continent?
Yes, for sure. I think from the perspective of the individual making a decision, so anyone sitting in a company, I think it takes time to fully take the risk to go all in on Bitcoin. And if you look at the successful companies that did so, they were mostly either what you call a zombie company, so a company with a dying business model. But I think MetaPlanet is an interesting example because they were funded by Goldman Sachs, I think. So Red Planet, the company that existed before it was stopped, MetaPlanet, and turned into a Bitcoin company, was a hotel company. They were operating hotels. And COVID started to show basically the downsides of being active in real estate, which is you're dependent on third parties a lot. So number one, vacant hotels mean there's no cash flow, right? And then what came after were higher interest rates, and that hit everyone, also in Europe. The interest rates that were raised in 2021, they hit everyone pretty hard, and that led to two problems. So number one, also talking from personal experience, I understand, of course, that any property that you hold that can be sold tax-free, theoretically would be better off sold into the market and then that money put into Bitcoin, right? But you can't sell every property for various reasons. If you are involved in the business of real estate, you want to at least pay back the debt or your investors. So at least you want to hold a property for 5 to 10 years. And with higher interest rates, you can't refinance the existing portfolio, because if you build that portfolio at 1% and then you refinance at 3.5 to 4%, that drains the cash flow, because within that time frame from, let's say, 2020 until 2024, due to the monetary debasement that happened in COVID and also thereafter, building has become more expensive. It's more expensive to maintain a property, right? So there's less margin. So it's difficult to refinance. I think that's the number one issue. And then secondly, you could say regulation, but it's important to say Bitcoin doesn't need laws to function, right? If laws could have prevented Bitcoin from functioning, Bitcoin would have not been a success. But it does take time for people that were doing very well since 2008 to come to the conclusion that they need to change their strategy. Saylor came to that conclusion because he wasn't able to outperform inflation and grow as much as the Magnificent Seven. Then Simon came to the conclusion because he was hit hard by COVID, right? And now real estate investors are slowly being hit by the higher interest rates and the higher maintenance costs and construction costs. But it's a slow process, and sometimes coming from inside, meaning from the Bitcoin bubble, you look at people working in real estate and you scratch your head. Why does it take so long for them to understand that Bitcoin as a benchmark is very hard to beat? Because once you understand that Bitcoin as near perfect money is a good unit of account, you can use it to measure your success. And once you do that, it's actually kind of scary. Once you start measuring your real estate portfolio in Bitcoin, you understand you need to hedge what is happening, because that monetary premium that sits in real estate because it is used as a store of value, both due to its scarcity, but also to the ability to finance real estate purchases. That's something I want to get into after, which is the financing that exists around real estate, because as you said, real estate is accepted as collateral, and that type of financing structure does not yet exist around Bitcoin. I think it's going to change very, very soon. But that's the reason why it took time for real estate investors to feel the need to get involved with Bitcoin. And now, talking about tax advantages and leverage, just quickly. Real estate is not just interesting because it's like limited in supply. It's also interesting because you can lend money, leverage the financing, and there's tax benefits in the US, but as well in Europe. And these tax benefits exist around real estate because governments are aware that inflation has negative effects for companies. That's why they allow large corporations and also wealthy individuals to store their wealth long term, because that helps to build a capital base in a jurisdiction and to help employment, right, grow over time. It would be better if there would be no taxes or little taxes, but I'm just saying that's that type of thinking. And I do understand there's a sweet spot in allowing people to accumulate capital. So there's incentives that exist around real estate at the moment, but these incentives can very well also exist around Bitcoin. And just recently, as many of you probably already know, in the US, they allowed Bitcoin to be used as collateral in mortgages. So that's a big step, right? That's step number one. Step number two would be to allow businesses to transact in Bitcoin, to use it as a medium of exchange without paying capital gains. And I think the US might have some incentives to do that. I don't have a box, I don't see the future, but I think that could happen soon.
Thanks for the details. I think also, Leon, one of the obstacles that make it longer is that real estate is not as divisible as having ETFs or a portfolio stock. Someone who has a portfolio can put maybe 1% in Bitcoin. And maybe if you have 6 property of real estate, you should sell one. So it takes more time maybe to decide to sell one property. You cannot sell 1/10 of a property.
Yep.
And so
it's
also
less
hard.
liquid, yeah.
Yeah, and also for the normal people, there is always the dilemma to buy the property with the mortgage, you have to rent and invest in Bitcoin, or there are any solution, some solution in between, because the majority of people they don't have the possibility to buy everything. So, how did you face this problem with your firm, or is your firm just dealing with wealthy individuals? Do they exceeding in Bitcoin, like take out a loan out of the real estate to finance Bitcoin purchases? How does it work, and what challenges did you face with different classes or individual, like working class versus a wealthy individual? If you can expand on that.
Yeah, I'm happy to. I had a bit of a cold, by the way, so I hope I'm not too nosy. I don't speak too nosy. But our company is we are a small firm with a few partners that all work together, and we do everything from. So of course we take in capital from investors, but very selective. We work with selected investors over long periods. So at least 10 years. Everybody that's working with us, we've been working together for 5 to 10 years. So we are a small team. We've developed around 100,000 square meters, and we keep it. We hold long term. We find underdeveloped properties. We acquire them. We secure capital and financing. We buy the property. We build with a partner. Then we keep the building. We rent it out long term. So that's what we do. It's a 360-degree service, so to say. But we do it with our own capital and with the capital of a selected group of investors. And I can't speak for anyone else than myself. And within the company, my role is to find ways to accumulate Bitcoin, but to do it in a way that aligns with everyone in the capital structure. Because if you think about real estate, it has gone through a process of financialization. And that means that real estate today, it's not priced based on its utility. It's based on its ability to preserve value over time, to spin out cash flow, and to fund also the banking system, because it's a very important part of the banking system. It's today, together with the 10-year US Treasury, it really is the bedrock of the global financial system. And they fund most of the credit-based institutions also, right? and governments as well, pension funds and so on. So it's important to look at every party that's part of the capital structure. So you have the developer, you have the architect, and you have a capital partner, and you have a bank. And you could also have people managing it. But I think what's important is, if we talk about real estate and lending Bitcoin as collateral and the financialization of Bitcoin as pristine collateral, it's important to also let banks understand that, theoretically speaking, it's very difficult right now from the regulation to do that, but theoretically speaking, if you fund a real estate project, it would make sense to demand from the borrower to take on additional capital. So let's say somebody needs $1 million to buy property or to develop property. You would say, as a bank, as a lender, I give you 1,100,000. With 100,000, I demand that you buy Bitcoin, and we keep that Bitcoin either in a shared custodial manner or with a third party. If you don't pay back, or if you go bust, the Bitcoin belong to us. If you don't go bust, you pay us maybe a higher interest rates on the Bitcoin. So let's say you pay 2 to 3% on the real estate project. You pay 5 to 7% on the Bitcoin, because there's higher risk for the bank in giving money for Bitcoin to be bought. But think about it, as the bank, once you understand that it's actually an insurance against the borrower defaulting on the loan, and if the borrower defaults on the loan, you actually financed your own Bitcoin balance sheet. So the way that banks also think about real estate right now, they, I think, could think about Bitcoin or dual collateralizing both asset classes. And the positive effect of that would be, as an investor, you have a higher upside. It's a hedge against Bitcoin draining the monetary premium. There's geopolitical arbitrage, like, I don't know, something goes wrong. Right now, there's a lot of conflict. So I think it's worth considering having also parts of your net worth movable and digital, and sitting in the same capital structure though as a building, because it takes away some of the stress that is involved and some of the risk that is involved in real estate. And also for the architect, now I go offside a little bit, but I do believe that once an architect will have more time and a little bit more leisure time, and they are less worried about meeting the demand of the developer, because it's a constant battle in real estate development between the developer and the architect. The architect has a certain idea, the developer wants to save on cost. And as time moves on, and as inflation and monetary debasement causes construction costs to rise, sometimes you start a building with a vision, and then after 3 years, you don't have the capital to make that vision whole. And architects often, I feel, get less motivated. And then there's a weird dynamic where you have to push the project till the end, because you are dependent on the rent to pay back the bank. And then it just becomes its own fiat matrix that I think Bitcoin can help to dissolve.
But Leon, you were talking about that the bank would lend out extra capital or extra money to buy Bitcoin. But I worked at the bank for 5 years, and I was on that side. I had to do the risk management for the loans that we might lend out. But I know we were bounded to the loan to value. Yeah. And I know in real estate, I don't know how it's in Germany right now, but I don't know what the loan to value is that banks are willing to lend out. Is it 80% or 70% for commercial or real estate?
Yeah, maybe? It used to be 80, now it's like 60, 70.
60, so it's lower. But then, they should add the Bitcoin to the value side to at least get more, because else you need just more own capital. So do you know how that works? Do banks work like that at the moment, that they lend out more? Not yet.
Not yet. I can share something with you. I can share insight without going too much into detail. I am working on it, of course, and it's taking time. And at the moment, what you're saying is very correct, because the deal that would exist right now would usually be that a bank that has knowledge about Bitcoin would do a partnering deal with a bank that has little knowledge on Bitcoin, and you would need to over collateralize the loan. So you would have to put in more equity to finance the Bitcoin, and then there would be little reason to do that. You could just buy Bitcoin yourself, right? So what you're saying is very true, and it's the reason why there's no working structure at the moment. A bank would actually need to be able to book, which they are now in the US, by the way. They could do that because Bitcoin can now count as collateral to a mortgage loan, right? So in the US, I think this will happen very soon. If you ask me, that this is going to happen in the next 18 months.
Okay.
Yeah. That's just my intuition, right? I don't know, but if you ask me, yeah.
Yeah. Okay. So, and Leon, I know you have your own news letter, and you wrote about strategy, and I think you're working now on a Metaplanet comprehensive piece.
Yeah.
For people who are not very, who are not following all the development for the Bitcoin Treasury companies, could you give a helicopter view, 10,000 feet up, what is the most important thing to understand what is happening with the Bitcoin Treasury companies at the moment? What should people really grasp and understand about what is happening?
Wow, difficult question. I'll try to roll it back. How did it start? Why did I get interested in the idea of a speculative attack? And what I think about maybe the Bitcoin Treasury space, because at the moment it can look strange seeing all these companies popping up in every single capital market trying to copy the strategy playbook, which is borrow fiat and buy Bitcoin. But if you look at how it started, there's actually a sound rationale behind it, which is the following, and it's been laid out by Pierre Rochard in an article he published with the Nakamoto Institute in 2014 called Speculative Attack. He basically says fiat money is dead. Every dollar that you use to buy Bitcoin is a debt-based dollar. And then the question is, how much debt do you want to take on, and how much do you want to make use of the ability to accumulate Bitcoin early on in its monetization phase with money that's losing value over time, while Bitcoin is rising in value very fast. And since then, I think Bitcoin did 100x. And from strategy's perspective, the idea was not, we're just going to speculate on Bitcoin. The idea was basically, we want to save the cash in our company, which they did. Then they understood it would make sense to take on leverage to buy Bitcoin. Then they started to, and this is now important, I think, when we talk about Bitcoin treasury companies. Why do public companies exist? They exist to help shareholders participate in the productivity and the increase in value in whatever company builds. So that's why shares exist. If you hold a share, you participate in whatever that company which you hold a share in does, right? You could, by the way, say the same thing about Bitcoin. If you hold Bitcoin, you participate in whatever any Bitcoin treasury company does, which is true. That's why you don't actually need to hold anything else than Bitcoin, because it allows you to participate, just like real estate allows you to participate in a city or in a jurisdiction, or New York real estate allows you to participate in a global economy. Bitcoin allows you to participate in the Bitcoin economy and in the global economy, because the global economy will operate on Bitcoin. But for these individual companies, the idea is always, I want to provide shareholder value, because that's the responsibility of a CEO. If you're a CEO, you run a company, you have a duty to provide shareholder value because somebody gave you money to run your business. And from that perspective, the most rational thing to do is to buy Bitcoin for your company. So I think the idea of a company holding Bitcoin, that's just very rational. There's nothing to be criticized. And then the next step is, if you're a company and you understand how do you grow in the fiat system, you actually grow by debt. So why don't you grow by using that to buy Bitcoin instead of maybe increasing your business, increasing your overhead? So that's the step that involves leverage. And now the second question is, if you really want to increase your shareholder value, you should help your shareholders to gain more exposure to Bitcoin. Because if once you understand that Bitcoin loses value, the fiat value of the stock actually has little meaning. So once you start denominate the success of a company in Bitcoin, the next logical step is you need to increase the Bitcoin per share of your company. And that's what strategy has been done. And then the dilution becomes accretive. because there's more Bitcoin being held on the balance sheet. Obviously, balance sheets that hold Bitcoin will also be favored soon in receiving money. But the next step then is, I think, looking at MetaPlanet, because next to Strategy, MetaPlanet, like you said, is the company that I pay most attention to, because they stand for something much, much larger. And Strategy started to securitize the access to Bitcoin. I think there was a journey. I watched an interview by Feng Li yesterday, and he explained when they went on this journey, they didn't plan it out like it turned out, but they understood that it's not just their own shareholders that want to have exposure to Bitcoin. It's actually the whole world that wants exposure to Bitcoin, but some of that capital is locked up in institutional mandates. They don't have any access. So you can securitize Bitcoin and give them access. And then they have access not to Bitcoin, the underlying asset. So they are striped off the self-sovereign properties, but have exposure to the price. And some people also learn like that. So I also came to the conclusion, when I started with Bitcoin, I started because despite authoritarian governments, totalitarian systems, and I really disliked Keynes in university because it was almost as illogical as Marx. And when I studied him, I was like, this is garbage. Why is this being taught in my university? That's how I got involved with Bitcoin. Learned about the cypherpunks, thought that's great. These guys are fun. Learned about Rothbard. But some people come from a different angle. They come learning about Bitcoin because they are interested in the price of Bitcoin, and that draws people in. I think people find Bitcoin, and people find Bitcoin when they need it and when it's demanded. And that's a positive secondary order effect. And in Japan, I think there was also, by the way, Johan, it was it's kind of an accident that MetaPlanet, I think, turned out to met a demand that that's what I understood, didn't even know existed. Because what happened was that MetaPlanet securitized Bitcoin access in Japan, but by doing so, they tapped into the ability to actually also allow their shareholders to have tax-free access to Bitcoin, because Bitcoin is taxed with 55%, up to 55%,
Yep.
the income tax in Japan. And that is because of Mt. Gox, because of the hack in 2014. And in NISA accounts, which are pension funds, you can hold, I think, up to $15,000 in dollars per year tax-free, and you can also trade Bitcoin on margin if you want to. You don't need to, of course, but there's again an element here of the speculative attack.
Yeah.
And the positive secondary order effects of this, I just quickly, just to finish, is that just like buying Bitcoin makes people not put money into real estate, which helps real estate to become cheaper over time, what is happening with the Bitcoin treasury companies is they channel human speculation, which is natural, into the Bitcoin network, not directly into the asset Bitcoin, but into securitized Bitcoin, which also helps to take away the pressure from investing into housing. And in a market like Japan, it's one of the most important capital markets of the world. It can restore trust in Bitcoin. And that's what I think is most important. There are many other things on MetaPlanet I'm excited about. I'll share my report on it very soon. It's a 30-page report. It's quite detailed. Johan, thank you. You gave me also feedback on that. I really appreciated that.
Yeah, you're welcome. So if I can summarize real quick, you were talking about zombie companies, and I think they realized that there's the hurdle rate, and the hurdle rate was 5%, and when rates went almost to zero, there was almost no hurdle rate. So there was misallocation of capital, but now businesses are start learning that Bitcoin has like a compound annual growth rate of 50%, but maybe in the future it will be 30 or 20%. And I think they are realizing if we just do our business, our core business, if they don't make that 20 or 30% net profit margin, then it makes more sense to just invest in Bitcoin more. And so yes, and the fact you were talking about MetaPlanet, they found, like strategy, along the way they found like almost arbitrage trades that they didn't realize. They first did it for themselves, and they later on learned that they could do it for others, or make or come up with the instruments to make it possible for others. And maybe one last question from my side to you, Leon. I heard you talk about the comparison between Strike and real estate because of the cash flow and also an appreciation of the asset itself. Maybe you can,
Yeah, no, for sure. It's a very interesting point. I think that so the preferred offering Strike that MicroStrategy released, I think they did it in March, right? I think 10th of March or 23rd of March. And it has a reference value of $100. I think they issued it at $85, and now it's trading well above $100, well above par. But it's 8% on par that's being issued. So you receive $8 in distribution with Strike. And Strike also has the option to be converted into common shares. I think it's once MSTR, the common share, hits $1,000, you have the ability to convert 10 strikes into an MSTR share. You don't need to, because once Strike trades at 150, there's little reason. And you also, with a preferred stock, you sit higher in the capital stack. Meaning if MicroStrategy goes bust for whatever reason, if you hold a preferred stock, you'll be the one receiving anything, if anything is left, before the common shareholders do. So some people prefer that, especially in large institutions. And I've been discussing this with friends. And the question is always also, if you're a Bitcoin and you have parents, how do you help them to have income, right? Because real estate was the gameplay, I think, for an income-based wealth strategy before the preferred offerings by Strategy. But now you do have the ability to lend money to Strategy, and Strategy pays you $8 on par, which beats the average yield on real estate. The average yield on real estate, I'd say, without leverage is like 3 to 6%. So if you invest money into real estate, you do have a yield of 3 to 6%, excluding tax advantages and leverage. But it can be a headache, right? You have tenants that you need to take care of. You have maintenance costs, and it's a business actually. Real estate is a business, and putting money into Strike, for me, has lower risk because I think the fact that they hold 60 billion worth of Bitcoin, as long as that is properly secured, that makes me be more faithful in them having the ability to pay the distribution than for real estate to be able to withstand weather and a war for the next 50 years. So now with Strike, you have the ability to generate a bit of upside, and you have cash flow income. So you tap into that demand that exists in the real estate world. And I think it's like a substantial demand. I don't know what you guys think, but I think we all know somebody that wants to save in order to have income for their retirement. And I think Strike now is an option that's easier to access than real estate and easier to handle.
I think that the variety of the option is the strength behind the MicroStrategy. All of the financial instruments which can be used when according to the market condition, to the stock condition, and to overall conditions. So that's their strength. I will just wanted to take a 20-second commercial break because I want to let our audience know that this episode is brought to you by Bitvault, is sponsored by Bitvault. Bitvault is the first wallet solution to solve the problems of physical attacks and hacks, thanks to our one-of-a-kind time delay over multi-sig technology. So you can just head over to the bitvault.sv site, is below on the Alessandro's latest comments, and you can subscribe to be a beta tester for free. It's going to be released in October, so you will be very welcome to test it out. Thank you very much, and I leave the word to Alessandro if has other question.
Yes. Leon, thanks for the details on these Bitcoin Treasury companies. It's also probably the topic of this month. One question from my side on this: do you see a risk, maybe not with the MetaPlanet now, not with Strategy, and not with others who are joining blockchain group who are starting now, but in case the price goes up to now 130, 150, and other joins, and they start to leverage their stock to buy more Bitcoin. In case the price, as it happened in the past, maybe we will not have any more 70 or 80% drawdowns. But if the Bitcoin price goes 30% down in 2 weeks, as it happened in the past, after going up, could be a problem for these companies that maybe they have to sell the Bitcoin because they bought mostly at the top, and they also are in leverage. Because also, as you said, a company who has Bitcoin in the balance sheet, I think no one should criticize. It's also one full step of adoption. There were retails, then now institutions, and also companies. But on the leverage side, if Bitcoin goes minus 30%, could be a risk for some of these companies.
No, for sure. I agree with you. The reason why I talked about Strategy and MetaPlanet also are because I think they are have the most secure balance sheet. MetaPlanet, for example, so far they have raised most of their money through 0% bonds or low percentage bonds and shares, and so issuing shares to raise capital to buy Bitcoin. I think their debt was around 1% last week, and now it's close to zero. And Strategy also has a very strong balance sheet, and they have income because of they still run their business intelligence service. And these are two companies that also they didn't set out to do what they do. They actually kind of developed because they saw an opportunity. They were first movers. They have a great team, great marketing, and there's reason for these companies to potentially become Strategy. Wouldn't surprise me if Strategy would become the biggest company in the world, and it wouldn't surprise me if MetaPlanet would become one of the biggest companies in the world, because MetaPlanet has the ability to tap into the fixed income market in Japan, and in Japan, the Bank of Japan pays around 0.5% interest, and there are only a handful of corporate bonds in Japan, and they pay between 2 to 4%. So if you offer a 5% distribution, you can tap into one of the largest capital markets in the world. And there's also levels to being a Bitcoin treasury company. And most of the companies that start now just from the sidelines, they're starting like you should not start, because you should have a very low amount of Bitcoin on your balance sheet so that it's easy to create that premium, that MNAV that everybody likes to talk about. But it is such an important metric, because if people don't believe you are able to, over time, increase the Bitcoin on your balance sheet, they will not buy your stock. And then there will not be the ability to arbitrage the difference between the value of your balance sheet and the value the market assigns to your company. And a lot of the companies that are starting now, I think, are being maybe there's a lot of companies that are interesting and that have, I think, a low debt ratio. But some of the companies I talk with some as well. I don't work with any, but I talk with some. And sometimes I am actually surprised by how little they are aware of the fact that they need to start with few Bitcoin. If they don't have an existing business line, they will not be able to generate income in a bear market. And if they're issue preferreds, they won't be able in a bear market to issue stock to pay for the distributions on the preferreds. So there will be, I think, a storm brewing, definitely. I mean, some of the companies will go bust, there's no doubt. But the business model in itself, it's sound.
Yeah. Okay. Thanks. And also, as Austrian economics teach us, it's also part of the game. Many companies try, then the less profitable, or the one who risks too much, they will maybe have problems. But also, probably will have less impact on Bitcoin versus what Mt. Gox had, or also what Celsius, all these exchange when they went bust.
I think so. And there is a positive network effect with these companies because they buy Bitcoin. So I'm sure there's always scammers, but they even have to buy Bitcoin. They can't somehow.
Yeah, I agree. Maybe we should also speak one moment about the price today. It's the 14th of July and we have all-time high. So we reached 123K. Now I think it's trading a bit less, but it's been a big week for Bitcoin price. Do you think, Leon, this is helping also real estate investors to get more interest? How do you see the retails with this all-time high? From my perspective, has been the quietest all-time high for retails. I mean, we are in the echo chamber, so we celebrate. Twitter is going many more posts, but outside our bubble, fewer and maybe make some questions, but not that much more. How is your experience?
People don't seem to care so much.
Same. Do you think there is a price? One would be a price where I was thinking 100K, but it did. It did for many less than what I was expected. What are they waiting? 150, 200K? Some they say till 1 million they will not wake up.
Yeah, I think, to be honest with you, Bitcoin adoption might happen a little bit different than I expected, because you also talked about my master thesis. In my master thesis, I thought Bitcoin will be used as a medium of exchange and a network for settlement. So I talked about the remittance market a lot. That was even before the Lightning Network. I thought Bitcoin is going to become the currency of the internet, like, everything that didn't happen. And what I came to understand now is Bitcoin adoption is going to happen through different means. So I think the ground, like, nobody cares about the Bitcoin price because people really don't care about Bitcoin. It is kind of sad, but that's really the case. Especially people with money in real estate. I'm talking about real estate now.
Yes.
There are 5 to 10% of my circle that has been interested in Bitcoin for 2 to 3 years due to higher interest rates, higher construction costs, and so forth. But some people just don't care. They don't want to deal with it. They have so much stress. Imagine you build a project worth 100 million at 2% interest rates, and then you refinance at 5% interest rates, and you haven't rented out maybe all the apartments. You are in big trouble, right? And people are very stressed. In Bitcoin, it's difficult to understand if you're stressed. But what is happening, some of these individuals that don't care about self-custody and they don't care about the difference between an inflationary and a disinflationary model, because of the Bitcoin Treasury companies and because of the ability to now call their broker and buy Strike, I think that is seriously how the capital from the fiat world will flow into Bitcoin. You can say it's bad, you can say it's good. Actually, it's good for us as Bitcoiners because it helps us to accumulate Bitcoin and self-custody at a actually fairly cheap price. Because if you'll ask me, with everything that's happening in the world, Bitcoin could be at 250,000 if people would catch on to what it is. So actually, I'm kind of happy that people don't. And I just see that the routes to Bitcoin are being built right now through these preferred offerings. That's something I didn't see coming at all, but I feel like that's what's going to happen adoption-wise, even more so than the ETFs.
Okay.
Yeah, so what I also find interesting in issuing the preferred stock is what the one thing I like about it. I read from people were selling their Bitcoin to buy MSTR, but that was like for me. I know why they did it. It's more volatile. It's more speculative. But with the preferred, people don't sell their Bitcoin to buy Strike or Strive. So the preferred it's really tapping into another pool of capital, and I think that's the greatest unlock. And I see Dylan Leclerc talk about it a lot, and Adam Beck, and they're sharing memes like this big dam, it's about to burst, and all the water will flow towards the down towards Bitcoin, because it's
Under gravity, yeah.
Yeah. So that's great, and I wanted to touch on one other thing, and it's more a personal question. I was wondering, because you read about Austrian economics, you read Rothbard, Karol B. Menger, Hayek. How are you for yourself implementing that in today's world? Because I read some books, and I read like Praxology of Knut Swanholm, and I sometimes struggle with applying Austrian economics, but also basically partly I'm doing for living is analyzing markets, and that's not really an Austrian economic thing. It's more like a Keynesian or empirical thing. So I thought, how are you looking towards this, and how are you dealing with that?
Yeah, I'll answer, but I didn't mean to cut you off, by the way, before. If you wanted to finish your sentence, I didn't mean to cut you off.
No. I was finished. Yeah.
Okay, great. I just shaked my head because I just want and actually markets, the ability to like charts, for example, that all comes from Vienna. So the Keynesians just kind of distorted the use of it. They created, I think, the use of charts for empiric, like assessing the future in a way. But if we go back to where do Austrian economics come from, right? So in 1871, Karl Menger wrote a book called The Principles of Economics. And in that book, he talked about not what money should be, but he talked about what money is. And he said that gold is being used as money. And he also talked about, Ludwig von Mises later did as well, about something called, what now is called the regression theorem, meaning gold had a use not because it was money, but because it was scarce and used for jewelry, for example. So there was some use for gold, but it led to it being used as money only, right? And it was used for nothing else than the ability to trade it for something else, meaning it's a medium of exchange, right? And from a medium of exchange comes the store of value function. And I don't want to go in too much into philosophy, but you'll ask me, so I can explain a little bit the viewpoint on that, because actually, if you think about it, storing value, actually, that does not exist. It's an illusion. The only thing that happens is we'll all have an anticipation of the future demand of something. So what is happening, what we are discussing right now, when we say the value of Bitcoin, we are saying what is going to be the future demand of Bitcoin. And we're saying there will be more demand because of the preferred incomes and because of this and because of that. But what we're doing is we're applying our idea of future demand for Bitcoin onto Bitcoin. That's what we call value. So value within money only exists because it's being used in trade. And that's why I think that the discussion about Bitcoin being a medium of exchange and a store of value, it's not really sensical, because Bitcoin very clearly is money. From the Austrian perspective, Bitcoin very clearly is money. There was actually a use case for Bitcoin before it was used as money, which was a collectible. People used this on World of Warcraft for gaming, and they gifted each other Bitcoin for good kills and in other games, right? So Bitcoin even in a way fits into the regression theorem. But good money then can be used like you want to. And the reason why it's irrational to spend Bitcoin right now is because there's opportunity cost. It will monetize, and if you spend it now, you're giving up on the future purchasing power. But Bitcoin is money, and that includes both functions. And then another function of money is credit and capital, right? Money can be capital. Capital are the means of production. And if Michael Saylor says Bitcoin is capital, what does he mean? He says Bitcoin can be used to be lent against, to buy more Bitcoin, or to fund your company. So actually it becomes part of the production structure. So Bitcoin is capital, it's credit, it's perfect, near perfect money, it's a medium of exchange, it's a store of value, unit of account, it's all of it. And now you ask me, how does it help me? So Karl Menger had a few students, and Friedrich von Wieser and Eugen Böhm von Barwerk are very important because they came up with opportunity cost and time preference. And today these are important terms. And then Ludwig von Mises, of course, and Friedrich Hayek. And in the time in Vienna in the 1920s, the Austrians used to hang out with psychologists, with all sorts of different people. And there is two things. There's the Austrian School of Economics, and there's the Austrian School of Thought. And the Austrian School of Thought includes economics, psychology, and also charts. So the first charts came from Vienna in the 1920s. Psychology, Sigmund Freud, Carl Jung, this all started in Vienna, and these guys all used to hang out with each other. So actually, I think you are actually, in a way, an Austrian economist, because you are what you're doing, because we chat a lot as well. What the Austrians say, what you can't do, you cannot predict the future. That's what the Keynesians try to do. They say we need to have 2% inflation and this type of employment, and then in 2 years, it's not possible. The future doesn't exist. You can build models, though, to imagine how something would be in the future in order to channel your actions today. So the reason why I think I started to hodl my Bitcoin is because I read Menger, and that helped me to understand that good money in the economy over long periods of time drives out the bad money, but people spend the bad money short term, so you should keep your Bitcoin and things like that. So the hodl mindset and low time preference, all this stuff, it's Austrian economics, charts is Austrian economics, and market psychology as well. It's Austrian school of thought. Please excuse me. It's part of the Austrian school of thought, and Austrian economics is as well.
Okay, good to know. Thank you.
Long answer.
Yeah, I mean, and if we go back to why retail is not here, we can see how big the leap is from one economics to the other to be made, and that's the underlying problem, in my opinion. The leap is too big, and this BlackRock they will facilitate it. I see a scenario where they put Bitcoin passively in their portfolio. People don't even know active manager funds. I see something like that. They just notify them, hey, we have put 1% because we think so. And that's how I see this cycle going forward. I mean, that's what I think.
Yeah.
It was like, I think we'll play like the internet. In the 90s, most of the people were against. Only those who study the internet know how it works. They use the internet, and now everyone is using the internet without knowing what it really is. Some years from now, everyone will own Bitcoin without knowing what Austrian school is. We are now heavy on Bitcoin because we learned Austrian School of Economics.
Hopefully, it will help people to find out that another school of thought exists. Because Francesco, what you said is true. It's like somebody might listen to this and he'd be like, "What the fuck?" And it's just too much, maybe, and it's not interesting. But once you hold Bitcoin and you see how it performs, maybe then you start to become interested. Yeah.
True.
See, for sure, the new generation are more prone to change because the difficulty is to change. If you put 60, 70 years old person, which is where most all the wealth is parked now. So the best strategy for BlackRock or this fund is just to put passively without them even knowing, because otherwise, if they have to change it to understand, that could backfire because they could get scared. So I think this cycle will go ahead like this. That's why we don't see much engagement from retail. It will come eventually, but now it's a bit different. But then the new generation, then they can learn, they can absorb better, in my opinion.
This also, as Leon said, it will be more likely they will invest in Bitcoin, then the price goes up, and then they will wonder why it's going up, and then they will learn from some videos. Oh, Bitcoin is economy made by Austrian School of Economics, is the school of thoughts, and maybe some will learn. Interest time ahead. Personally, I think we will not see retail still maybe 150 or maybe 200. For me, it's also set for retailers. For example, Sailor is buying 10,000 Bitcoin per week sometimes. We could have 10,000 people, whole coiners more, but people are busy with other things and they are not learning Bitcoin. Probably they will start later, and then they can afford only a portion of Bitcoin, because the window to own a whole Bitcoin, if you start from now, also from middle management or middle class or middle upper class, is almost closing out, I would say.
Yeah.
Yeah, Jeff Park was talking about that owning one Bitcoin is the new American dream. So it will set you up like for the future middle class. You don't get rich, but you will just be able to buy a house, provide for your family, and stuff like that. So,
This is
I know you were telling me that you are busy writing a book. Please tell us about that.
Yeah, it's a never-ending story because I've been like with everything that's been happening. I had to add a chapter on this, add a chapter on that, and there's been so much going on, but it's been a lot of fun. And it's going to be released with Bitcoin Magazine, Q1 2026, the latest. So yeah, I'm looking forward to that. It's called Digital Real Estate, and it's about Bitcoin and real estate. Who would have thought? And I'll talk about the investment thesis behind both asset classes, the Bitcoin strategies for real estate investors, and then I talk about all the social, economic, secondary order effects of Bitcoin becoming the unit of account, what's going to happen to interest rates, to housing, to architecture, things like that.
Okay, interesting. Yeah, and also as we said at the beginning, it's also very good areas because there are not so much people are focused on that area. So we need also material for real estate. It's
Yeah,
more.
I would say that's a bestseller right there.
There is a lot of material for gold, stocks, and so on. But comparing with the real estate, there are not that much people focused and educating on real estate. So when
Not
the time
yet.
will come, the book will be there.
Yes, exactly. That's what I feel like. Like once they come, I feel like the book will be ready just in time.
Great to see. We are also approaching the 60 minutes time. Maybe it will be time to wrap up. Leon, which are your closing remarks for this interview?
Yeah, thank you guys. Thank you for having me on. Enjoyed it. And if you guys want to get the Meta Planet report, my newsletter is for free. There's no advertisement. It's just text. leonwankum.substack.com. You can subscribe to my newsletter. And I hope to see you there.
And people will can follow you in X, right? Leon Wankum.
They can for sure. You can follow me on X. I'm on Nostr as well. I have a website, leonwankum.com. It's actually quite an extensive website that I built. And maybe I'll share a tool that I've built as well on digitalrealestate.org. If you are a real estate investor and you want to learn how adding Bitcoin into your portfolio can help overall portfolio performance and resilience, you can map it out with our tool that we built. It's also free of charge, digitalrealestate.org, if you want to learn how Bitcoin helps your real estate resilience.
Interesting.
That's great. You already got a domain name for your book. That's smart.
Yeah. The spoiler.
Yeah.
Yes.
Okay. No, that's push.
Thanks a lot, Leon, for participating. Also, many important information on real estate and Austrian School of Economics. So great to talk with you. Now, Francesco and Johan, if you want to add something.
No, for sure. I checked the site of the work. It's something you expect in the US, but I think you are at the forefront in Europe for this kind of intersection and what is coming in the following months and years. And also the fact that you're writing a book to be read in 1 year or so, it sticks to the value of Bitcoin long-term views and just. And so congratulations for that, because you need to have an interest which goes beyond the immediate reward. So it's something which for professional is not always the case. Thank you very much. It was a great conversation. I hope we can come across another time. It was a pleasure. Thank you.
I'll be
Maybe
happy
see each other in Prague, maybe next year.
when the book is out the latest, I'll be happy to be back, of course.
Yeah, great. Thank you, Leon. I always enjoy talking with you and sharing ideas. So thank you for coming on.
Thank you for having me. I appreciate it.
All right.
Thanks all. Thanks also for the listener in the live in X. There are more than 500 people. Thanks all, and see you in one of the next episodes.
All right.
Goodbye.
Bye-bye.
Bye. See you.
Guys.